Hello and welcome back to the Sovrenfx YouTube channel. So are you tired of constantly guessing where the Forex market is headed? Do you want to take control of your trades and increase your profitability? Well, look no further because in this video we're going to be diving deep into the world of Forex key levels. That's right, we are going to teach you how to identify and use key levels to your advantage in the Forex market. So from high timeframes to lower timeframes. So whether you're a seasoned Forex trader or just starting out, this video is perfect for anyone looking to gain an edge in the market. So don't miss out on this opportunity to take your trading game to the next level. Let's get started. So without further ado, I'll go straight into how I plot them. Quick, fast, so let me show you the magic it does before I show you how to plot it. So this is my normal gold chart. Okay, don't worry about these trades. We call these trades out in the free Telegram chat. So let me show you how perfect the key levels are. So key levels are basically where I enter my trades, and it is where price reacts. It is a price sensitivity area, historical level, and where price action meets fundamentals. Okay, so using the 1 minute, I get a chance to enter quickly before many retail traders get in. Just by throwing your eyes, you can see the reactions on the 1 minute time frame and the key levels. Okay, bounces off, reactions, break, retest, double top, drop. I mean, it's so clear. Today we had a very eventful New York session due to the US news, but look at how perfect, how beautiful it kisses the key levels. So look at this. First tap, second tap, third tap. Beautifully. Here's another key level. So here we were ranging because it was the NYSE open, and we always wait for that liquidity grab during NYSE, then we execute. So we executed the second trade here for 70 pips each, 140 pip day. Without going out of topic, let us look at how we plot these levels. So let us go to a clean chart. You want to start from the monthly, and don't worry if the chart looks cluttered, because it only looks cluttered in the lower time frame, in the higher time frames. But when you drop down to the lower time frames, you'll realize that the gap between two key levels is ranging from around 60 pips to 100 pips, which you can take advantage of. Let me try and get this chart in order. Okay, so you want to use the candle bodies, the candle closes, to plot your key levels, and you can also use the top of the wicks to get reactive areas. Okay, so let's start plotting. It's so easy, and it makes people, I wonder why people make it look like rocket science. So this is how we do it. Just take the bodies and let's start over here. So this is where the monthly closed. This month closed around here. We have another here. We have, look at the body closes. Look at the body closes, because these are significant price levels where banks and major financial institutions take their profits, and making these areas quite sensitive. can also have the top of the wicks. I'll just do this for now, and you can just add more levels depending on where price is at. So we don't need to draw any levels below here because price is around here. We already have our levels, and what I'd encourage you to do is such a level, you go to the coordinates and realize it's 0.38. You can just make it an even number so that it sits perfectly. Drop down to the weekly and do the same. Look for the closes. We have our close around here, around here, around here. And something about these key levels, you can always plan your trades. Look at the candle bodies. You can always plan your trading, let's say trading behavior based on these key levels. You can set alerts at the key level such that you don't stare at the markets the whole day. The closes. Okay, so make sure you exhaust such that you don't have a gray area while you're trading. You want to get the close of the candle bodies. So this is enough for now because these are just for reference. I can't go over and even out all these values, but I already have my charts that I've set up and how I look at before and after taking trades. Okay, let's drop down to the daily. Search areas. Look for the gray areas on the weekly and solve them on the daily. How about 2040? How about 2021? Okay, so that's enough. So I want us to drop down to smaller time frames such as the 15-minute or the 5-minute, so that you can watch how price reacts to these areas. So as you can see here, we have a gray area because we didn't exhaust, and you can see the pip range from the top to the bottom is around 200 pips. So we want to have something in the middle here, but you get the process. I don't want to go over each and every key level and make this video extremely long. Let us drop to the 5-minute. So you can watch the reactions of price to these areas. Look at this, taps, bounce. Why? This is because these are important price sensitivity areas. Okay, and these are not magical areas. Basically, these are the areas you want to look at as you're planning for your trades. It's not that when price comes here it's a buy, price comes here it's a sell. It's something you want to incorporate with your trading. Say if you're bullish for the day, you want to take buys above here, you wait for pullbacks around here, then enter another trade for buy. So that's basically it. I'll be making another video on optimal entries on the 1-minute time frame, how you can spot order blocks, how you can execute on such retests. Look at this, double tap of the key level, then drops. So that's basically it. If you have any question, you can leave it in the comment section below. Contact me on Instagram. I'm always ready to help. So without further ado, let me end the video here. See you next time.